How high will stocks go? We'll try to answer that question today. High-yield bonds, also known as junk debt, confirmed the bull market yet again. We will look at gold and dollar, as gold fails to break out to new records and dollar did not make a new lows. So that's a very interesting scenario there. And finally, we'll look at oil and natural gas, and I think if they break the certain key support levels, which I will mention in the video, they both could collapse. All this and more in today's edition of MasterChartsTrading.com market recap for already Saturday, July 26, 2025. Please don't forget to share, comment, like this video. This keeps the channel going as well as helps promote the videos. If you're a subscriber, stay tuned. We'll be covering quite a bit of various securities, ETFs, large cap stocks, as well as a whole boatload of various speculative securities such as Digital Turbine, Shoals Technologies, Uniti Group looks really good, Orchard Island Capital, as well as some gold related, although I'm not 100% on gold right now. If you're not a subscriber yet, go to MasterChartsTrading.com, click on sign up for one of the products. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart. This green, blue, red, and yellow lines. These lines are designed to make your trading super simple, to find out easily at what point to buy, at what point to sell. Is the security you're trading going up or going down? Literally everything in one tool, and it's only 4 lines are available for TradingView.com. Let's get to it. We're looking at S&P 500. Some of my very experienced trader friends are writing to me and saying that they are, to put it bluntly, surprised by the force of this move, especially this new breakout to fresh records, and we're currently at 6,380. If we get to like 6,400, somebody was looking at some data, one of my trader friends was looking at some data saying that it is very, very unusual, and it's like this hasn't happened like 100 years, this type of breakout. Yes, I'm not saying, I'm not arguing with them. I mean, look at this move from the lows in April. I call this President Trump's bear trap, where when he started mentioning horrendous tariffs, pretty much everybody and their grandma freaked out and sold. Yet you should have been buying here. We were buying just a little bit later, around May 2nd. This was the actual breakout into a new bull market. In fact, I personally still am holding NASDAQ, which I'm going to show you. There it is. So here is NASDAQ, QQQ. I personally bought on the breakout that occurred on May 8th, right here. How do I know it was a breakout? I didn't. The only thing I knew was that the price has closed above the blue support resistance line. And it's pretty obvious, right? You can't really miss it. When this price closes above the blue line, we just buy. And yes, I am still long. I still have a position open. I'm up about 17% or so. But going back to the S&P 500, we want to know, is this going to continue? Nobody knows. However, we can try and figure this out by looking at an estimate of, at the very least, what sort of a move can we expect to the upside. And so to do that, let's look at a little bit more long-term chart of S&P 500. So I'm going to actually turn off my indicators because actually they're not necessary at this just estimation point. And we're just going to look at this V-shaped pattern. I'm going to draw it out so that people can see it. And there it is. this V-shaped pattern. So previous highs were set in February of this year, 2025, and then pretty much non-stop until early April of this year, 2025, we saw a move to the downside. Like I said, this was a President Trump's bear trap, and people who decided to sell short or sell at this point around March, early April, they probably missed out on most of this rally. We are again long, we bought, as I just showed in the previous section. So why am I showing this? So now we actually have a honest to goodness breakout. So we have a new all-time highs and we continue higher pretty much non-stop. So we are at new records and we closed at new records. So how deep is this pattern? We can measure it. The depth of this pattern is 1,300 points, roughly 27%, but the important thing is how many points. So 1,300 points. So this arrow is showing this number of points. So 1,300 points lends us somewhere around 7,500 points for the S&P 500. This is S&P 500. Question is, of course, will we see a straight shot higher, or will there be back and forth? Previous experience tells us that yes, there will be back and forth. However, this move from April into June was pretty much non-stop move higher. So let's for a second pretend that this is going to continue, and it will just continue higher non-stop in this manner. When can we expect a move of this magnitude of another 20% of 1,300 points to complete? And it's showing me that this is pretty much could happen by December of this year. So what do you guys think? Make a comment. Will we see S&P 500 at 7,500 points before the end of this year or not? It's a pretty straightforward question. I think it's possible, but what's the percentage of success? How do we know? We don't, because right now we have what's called, and I hear this word non-stop, unprecedented. We have unprecedented this, we have unprecedented that, we have everything unprecedented. So can this non-stop move higher continue in this unprecedented manner? Absolutely. Why? Nobody knows. It's technical analysis. Here back in in March, April, everybody thought, very smart people said that, oh my gosh, we're going to have tariffs and we're going to collapse into the abyss. The exact opposite happened. We just continued higher. So can we continue higher in a similar manner? And very smart people will say the same thing, that it's not possible. Yes, they're going to say that. I'm not saying that. I'm saying that it is possible. There is just no way to tell that. What we can tell for sure is at what point to buy, at what point to sell. And like I said, all we do is we just use my indicators. Right there where I'm hovering on May 2nd, and then again on May 8th, we had an opportunity to buy around the blue line, and then we just trail higher. We continue to hold our positions. Like for example, I just showed for QQQ for NASDAQ. I'm still holding it from May 8th when I bought it. When will I sell it? When my target, or rather when my stop is hit. But where is my stop? My stop is at the blue line. So you can see that there is a lot of room for maneuver. So stocks could drop significant amount. I won't be stopped out. However, if the stocks continue in this manner, I will be pretty safe in keeping my position open because my stop is not terribly tight. If I had the stop at the green line, for example, or if I had my stop, I don't know, at some exponential moving average, which are very tight, I could get stopped out. But since I keep my stop pretty far back around the blue line, it's not as easy for me to get stopped out, and I can hold my position for longer. And one thing for sure that we can see from long-term history of stock markets is that the longer you hold your stock positions, the better it is. High yield bonds also have confirmed this stock market bullish posture. So we're currently looking at J&K high yield bonds. They are at all-time highs. They just hit all-time highs. So when high yield bonds and stocks move together in lockstep, I'm going to show it to you here. There's J&K high yield bonds. So I'm looking at the graph below here, this yellow mountain graph, and you can see its correlation is mostly positive and occasional negative, but mostly high yield bonds and stocks move together in lockstep. So when I'm seeing this type of behavior with junk debt high yield bonds moving to all-time highs together with S&P 500, I feel pretty warm and fuzzy. That means that we are seeing a confirmation from the quite smart traders. High yield bonds are traded by relatively sophisticated traders. When they're saying all is good, I'm okay with that. So far so good. We're seeing confirmation from high yield bonds of the robust bullish posture for the S&P 500, and we're going to continue holding our stock positions. Let's switch gears. We're currently looking at the dollar currency index. A few weeks ago I mentioned that dollar most likely has bottomed and rebound was very likely. This was around early July. We indeed got our rebound. Sometimes I freak myself out how good that prediction was. This, by the way, this topping candle, I also drew it in real time back in 3rd of February 2025. We indeed topped out and continued lower. So currently the picture is as follows. On the 15th of July, 16th of July, 17th of July, we tried to get above this line, yellow line resistance. So again, I'm not making it up. My indicators, even though they're calculated by proprietary method, provide obvious resistance levels, and so there they are. They were just manifested on this dates that I just mentioned. So yes, so far we have not been able to get above this resistance, and we pulled back. So far also we were not making new lows. So what I'm seeing is a higher low. This is a lower low from July 1st, and now I see a higher low from July 24th. If I saw a lower low just now, then I would be saying, okay, yeah, we're still in a downtrend. However, this is telling me that there's a possibility that we're about to, that we're bottoming out. Why do I care about the dollar? Is because we do trade gold, and this is gold once again failing to make a new all-time high. A few weeks ago, a few days ago, I was all like, oh my God, that's it. So on the 22nd of July, I thought, that's it, we're gonna break out and make a new all-time high. Again, we failed to do that, and the last 3 days, July 23rd, 24th, and 25th, we've been pulling back. And once again, we're back at the support, at the green line. Dollar is doing the opposite. It was trying to get above this yellow line, but so far failed. So when dollar is weak, gold is strong. Why? Because gold divided by US dollar. If the dollar is getting smaller, gold is getting bigger. Okay, the bottom part of this equation is gold divided by US dollar. So if dollar is indeed going to continue getting weaker, gold should take advantage of it and break the new records. And again, it hasn't done that. So this is what makes me pause and wonder, are we done finally with gold making new records or not? the picture for gold miners, this is GDX, gold miners ETF, is less clear because indeed we have made a record 24-year high right there on 22nd of July of this week. Just this week we made a new 24-year high. I do believe it was a 24-year high, if not an all-time high. No, it's not an all-time high. So previous all-time high was September 2011. So that's what kind of, I wasn't 100% what's happening. Yes, we made an all-time, 24-year high for gold miners, but gold has not, and dollar has not made a new low. So all of those taken together make me think that there is a somewhat strong possibility still that gold will continue correcting, especially if dollar even slightly strengthens, and especially if it breaks above this yellow line and continues maybe higher towards about 100 point level. So I'm watching gold very carefully right now. If this green line at 3,312, I'm reading it right off the chart where I'm hovering. If it doesn't hold, then I'm sure that we're going to see gold around 3,000 at the blue line. Again, you can sign up for the indicators on my site, MasterChartsTrading.com. And a few more things on the commodities front. Here's crude oil. This is a pretty, I think this is a bearish chart. I think because of this, giant bearish engulfing that occurred right there where I'm hovering on the 23rd of June, I think this is a bearish chart. Additionally, we have indeed closed below this red line, and yes, this means that we are in a downtrend. So we did bounce a little bit and closed this gap. So where I'm hovering, this gap between 23rd of June and 24th of June, there was a tiny little gap. So we bounced and this gap is now closed. However, we are literally very close again from having another short signal. When does a short signal occur? So short signal occurs when we see a high above or a close above the red line and then close below the red line when we're trading commodities. So there's one right there on the 24th of June. There was a close below the red line. I think we're about to have another signal. So I'm watching that very carefully. If that occurs, oil is really likely to move to around $56 and likely retest these lows from May of this year. And here in the United States, the gasoline prices have been dropping, and I think perhaps this is a prediction of oil prices continuing lower. So it does look like we're about to break below this crucial level. This crucial level is at the red line is around $65. If we break below that, I think we could easily just unravel and possibly retest the lows from the May of this year. Finally, I wanted to look at natural gas. So natural gas is very volatile. I don't recommend trading it unless you really know what you're doing, and even if that, do smaller positions. It's super volatile, very difficult to trade. What I'm looking at right now is this pattern from the low on the 26th of April to the high 20th of June to the low basically on this Friday. So it's an upside down sort of triangle. You can also, there's also like a double top here from 9th of May possibly. If it breaks below, and then now we're actually right at this red line. So again, like I just showed with oil, if we close below the red line, that means we have a short signal. And that would imply that we have a confirmation of a downtrend. And if that happens, I think we easily will move towards this yellow line, and that's about, about 23% down from today's price level. So currently we're at $3 or so, and we could move to $2.20 or so, possibly lower. But that all hinges on whether or not we see a close below the red line, which is currently at $3.01. So basically, if we close below $3, I think we will have a relatively strong move towards the yellow line for about 23% worth. And that's it for this week's recap. Thank you for watching all the way to the end. Please don't forget to hit the like button, subscribe to this channel, share this video. Stay tuned on how to find me on the internet. Other than that, thank you for watching and have another great trading week. To find me on the internet, please go over to MasterChartsTrading.com, hit on sign up one of the products. I have several products. I have two products. I have trading indicators and newsletters, and a bundle of both trading indicators and newsletters. So trading indicators are these lines on the chart. You can have them for TradingView.com. TradingView.com is a free interface. Once you sign up for the free account on TradingView, come back to my site, Master Charts Trading, sign up for the indicators, and I will open the door for you on TradingView.com. I send out daily alerts and weekly members only videos for my subscribers. So this week, for example, we'll be looking at various ETFs, large cap stocks such as Amgen, Chevron, McDonalds, Nike, as well as several of the speculative securities such as Digital Turbine, SolarEdge, Shoals Technologies, Uniti Group, Taysha, Gene Therapies, Match Group, Zoom Info, interesting pattern, as well as some of the gold related. The best deal, of course, is to get a yearly subscription for both trading indicators and newsletters, and that's at $49.95 per month equivalent, or you can sign up for $599 for a year, which gives you basically 2 months free off of the monthly subscription. If you want to get a monthly subscription, of course, you're welcome. And as always, you get free 7-day trial with all of my subscriptions. So if you don't like it, you can always cancel. But many people, almost nobody actually cancels. So consider signing up. Again, thanks for watching and have another great trading week. Bye-bye.